are we going to see less volatility in the rest of the year?
I do not think that volatility will die on, because how we've seen the tariff events pan out, there has been a perpetual delay as to when this will end, right? So this was supposed to end August 1, but now this is extended up to October. So I think markets will continue to worry, which will result in volatility. But I think the good side of this is that the TACO trade has become immensely popular now. So markets are also shrugging off some of the impact and are rather focused on more important things at this point, which in my opinion is earnings. I think it has become a very, very earnings driven market as we speak today.
So you think that this bullishness that we're seeing, where stocks just keep jumping from record to record in the US, is actually rational?
As long as the earnings continue, yes. We are in the middle of the earnings seasons. We've had about 5 of the Mag 7 release their results. They were all EPS beats that we've seen. There was a street worry that the capex of these companies will drop, but the results don't show that. The results show that the capex has continued to increase. In spaces like digital ad, Meta, where we have some of the bigger names in the industry, have done extremely well. So as far as tech sector is concerned, consumption is concerned, I think there has been some beat across earnings this season, and I think that will continue to keep the market buoyant, at least in the short term. There will be volatility 100%, but the market reaction to earnings show that it has become a very bottom-up market now.
But of course, there's this embrace of the disruption that AI is causing. But is there not a flip side to that? That there are industries and companies that are going to be on the receiving end of that disruption, and that's a bad thing?
Well, if I were to take an economist view to that, probably yes. But if I were to take a capitalist view to that, I would say that creates fresh pockets of opportunities. There will be companies that the world has not invested in before, which will now become even more relevant. So we've seen the whole history of the top 7 or top 10 companies in US getting to where they are today, but today, as we speak, in the enablers space, so not just the front-end AI companies, but the companies who do, part of a semiconductor value chain or some part in cloud, some part in cybersecurity, are becoming increasingly important. And there will be these pockets of opportunity. So I think over time, there will be this sector rotation that we will see as investors ourselves, where we move out from more conventional industries to more AI enabling industries, I would say. And market cap in theory is supposed to reflect the nature of the economy, and I think slowly and gradually we're getting to that point.